The big question floating around the real estate industry and maybe the world for that matter is what's going on with the economy? How is it going to impact real estate? Obviously, we have higher interest rates. We just got an unemployment report today that unemployment is down at 3.5%. What do we do? How do I take this into account? And today I'm going to talk to you specifically about real estate and maybe a contrarian view of what is going to happen both in the short term and in the long term. And I want to start by looking at Economics 101. If we think in terms of when supply is small and demand is great, what happened during the COVID period, we see values move up. And when supply is big and demand is low, we're going to see values move down or slow. And I want to keep that in mind because it's a simplistic view of things, but we don't want to lose sight of that also. And I want to discuss some ideas that I picked up from the Wall Street Journal. And before I go into them, I want to let you know the Wall Street Journal, in my opinion, is the best newspaper in the United States. They do a great job, and if you don't subscribe, I recommend subscribing. It's worth doing. I don't make a dime for saying this. I just think they're awesome. Now, the Wall Street Journal talked about this concept of golden handcuffs. And I'll tell you a story to illustrate the idea. In June of 2021, I helped a client buy a house in Kapolei. They got a 2.75% 30-year fixed rate loan. And if we went out today to buy that same home, they'd be in the 6.5 to 6.75% range. Now, it's my belief with that couple, they will never sell that home because they got such a great interest rate and it meets their immediate family needs as well as growth family needs in the future. And because their monthly payment is so low and the differential is so great between where their current interest rate is and what they could get today, I don't think they're going to sell. And the Wall Street Journal calls this golden handcuffs. And it's the idea that once interest rates get high enough above your existing interest rates, it keeps you from wanting to move. And historically, that differential is about 2%. All right? In today's world, that means that people that got 3% are at 3.5, 3.75% differential. So it's going to inhibit their making a move. And what's concerning or what might impact our inventory levels is 83% of the loans in the United States of America are 30-year fixed rate loans. And my bet is the average interest rate on those loans are below 4%, maybe 3.5%. And if you're above 4 or 5%, you were asleep at the wheel during this historically low interest rate levels. Now, what does this mean for inventory? If 83% of the loans are 30-year fixed rate and the margin is 2%, 3%, 4% above what people's current interest rates are, then they may not be sellers. And what does that mean for inventory? It means that we may see a lack of inventory because we have a lack of sellers. Think about it. Now, the other thing that we're seeing, and the Wall Street Journal talked about this idea of delinking the sale of your existing home from the purchase of your next home. And because interest rates were so low, many homeowners that want to move up are either going to pull equity out of their existing home on an equity line of credit, or they may rent their existing home out, get positive cash flow, and buy the new home anyway. Either way, if they don't sell that existing home, that could exacerbate lack of inventory. And when I look at all of the dynamics in the market today, tied with the idea that people are going to start piling cash into real estate as a hedge against inflation, could we, until this inflation issue is solved, see a lack of inventory and see values at least be flat, if not incrementally move up. It's going to be interesting to watch. And I believe that because of these dynamics of economics 101 and the historic low interest rates, and because of delinking, it very well may happen. Now, think about it. If you have any questions, feel free to contact me, and I'd love to hear your thoughts too. Thanks for watching.